Hello, everyone. Thank you for joining us. We are HUECU and joining the session for home buying with HUECU. We are so happy you are here today, and we are going to jump right into it. But before we get into it, I want to kick it over to Danielle to give us a quick intro and talk about HUCTW. Thank you for being here, Danielle.
Thanks, Terrence, for kicking us off. Hi, everyone. Thanks to our members for being here today. We know you're taking time out of your day to do this, and we are really appreciative that you're coming to learn more about home buying. And while I have the floor, I just want to thank the credit union for being such a great partner to HUCTW and for always making resources like this available to us. So without any further delay, let's jump right into the content.
Thank you. So for today's webinar, please don't worry, we have reduced all background noise and you are muted. So if there's anything going on, please feel free not to be concerned about it. And if you have any questions at all, please use the Q&A feature. The chat has been disabled and we will be answering questions at the end of the presentation. And again, no need to worry. This presentation will be recorded and distributed and posted on our YouTube page, and a follow-up email will be sent to you thanking you for attending with a link to the recording as well. And one more thing, please take our post-workshop survey to let us know how we did, how we can possibly improve this presentation for you in the future. And a little bit of background about the credit union. We are HUECU. We exist for you, our membership, and we are a complete non-for-profit banking institution, which what that means is we give resources in the form of better rates on savings loans and lower and fewer fees. We are here for you, the community, and we're always happy to interact with you. Speaking of interacting, please join us at our new branch in the Longwood Medical area. It is located at 435 Brookline Ave. Please feel free to stop by. We love to say hi. We would love to see you. There's always new things going on there. Without further ado, I will be kicking it over to Sharon, our esteemed MLO, to talk about home buying. Sharon? Oh, Sharon, I think you're on mute.
Thank you so much. I
Awesome.
appreciate that, Terrence and Danielle. I'd love to go over the presentation, and I'm going to just take myself off and go forward.
Awesome.
Today's agenda, we're going to walk through the home buying journey, and we're going to go through mortgage qualification and kind of give you an idea of what mortgage qualification, what the credit union does to qualify someone, and the difference between a pre-qualification and a pre-approval. And the next steps we'll go through is becoming a homeowner. Next screen, please. The benefits of having the credit union on your team. We do offer personalized service. Once you are teamed up with one of the MLOs at the credit union, we would stay with you through the whole process and guide you, whether it's the very beginning stages or when you're ready to put an offer in through the mortgage process. We do offer a range of mortgage products, including first-time homebuyer products. We offer competitive rates. We do rate surveys, and we try to be as competitive out there as we can. We offer a first-time homebuyer program, which is a nice, it's a program for all of our members. We can do a 3% down payment for any loan up to 726.2. We offer closing cost credits. We offer a discounted interest rate for our first-time home buyers. So any first-time home buyer who comes to the credit union will automatically get an eighth off the interest rate. So we post rates daily and we give an eighth off. Most of our process is digital, so you pretty much don't even need to come into the credit union unless you choose to. We can certainly make arrangements for that, but everything's done online. We keep all of our loans in-house, which is a nice feature. Sometimes it, at the very beginning that, that it doesn't matter much. But what's nice about it is once you do close on your home at the credit union, our in-house loan servicing team will take over. So we'll process all your payments. Your loan is on the credit union books, which if anything comes up, you want to pay down your mortgage, pay down the principal, you can come into the credit union. It can be done right away. If you have tax questions, there's someone in the credit union that can answer those questions pretty quickly for you. We do have portfolio lending capability, and what that means to you is sometimes we see that a lot on a condo. If there's something a little bit unique about the condo, the credit union has the ability to still move forward with the mortgage and help you, and we'll keep that mortgage in our portfolio. So we have a little bit more, we can, lend a little bit more. We can bend the guidelines a little bit on that particular condo or portfolio product. And we also do a relationship credit. If you're not a first-time home buyer and you do come to the credit union, we do offer a credit to closing costs for certain types of products that you have with us, along with the mortgage product. Next slide, please. So I want to just kind of touch on the current real estate temperature. Right now, it's a little bit hard. I'll be the first to say, we're not seeing a huge amount of inventory. Rates have gone up over the last, year. And the housing inventory is a little low. But with all that said, I have had members that I've worked with over the last, 3 months, 6 months, a year. They are getting accepted offers and they are moving forward in purchasing homes. So there is a purchase market out there. There's been some challenges for everybody, but I always say it's never too soon to start the process and getting all your information together and kind of just, seeing what's out there, because you never know what's going to come on the market. Interest rates, they're slightly high right now. Our 30-year fixed rate is at about 7.5, 7.625, a little higher than we want, but those do change daily and we do keep with the market. So, hopefully we'll see them come down sooner than later. Next screen. So the biggest question is, when I usually meet one-on-one with one of our potential borrowers, our members, is where do I start? Where do I start? What I usually suggest is it's never too soon to start thinking about buying a home. The first thing I would say is we'd want to do the difference between a pre-qualification or a pre-approval. A pre-qualification is pretty much, we call it just a conversation. We go through the process with you. We kind of give you an idea of, what you would qualify for without pulling your credit, without, verifying income. We just have a conversation. We would, talk about any debt that you have, potentially what you could put down on a property. If you do put less than 20% down, we can give you an idea of what your PMI premium would be. We have different products. We have conforming loans and we have jumbo loans. We have adjustable rate mortgages, which we would go over all that through the pre-qualification process. We'd go over your assets, your income, what is going to cost you in the long run. Yes, you do need your down payment, but what other costs are there? What else do I need to be prepared for? So that's kind of the pre-qualification. How the pre-qualification and pre-approval is different is we do the pre-qualification, we go over credit, down payment, products, assets, income. But with the pre-approval, we do pull your credit, we do verify your income, and we do give you a certificate to say that you've been pre-approved at the credit union for X amount of dollars with a down payment. When you do get pre-approved at the credit union, the actual pre-approval is good for 90 days. And we would work with you through the whole 90 days. We would keep continuing updating your pre-approval. I usually suggest to do the pre-approval based on the actual property that you're looking at. So, we start off with the pre-approval. Let's say you felt comfortable and we were going to do a pre-approval for a purchase price of, $450 with 3% down. However, you're out shopping and you come across a property that's actually, $425. I can adjust your pre-approval to match what you want to give on that particular property. So that way you're not giving too much, whether you're pre-approved for more, for more than that. If you're only interested in putting an offer in for, a particular amount, I can adjust the pre-approval at that time. So pre-qualification is kind of just going through the process, going over your specific income, your assets, what you'll need down. But then when we get to pre-approval, it's all the pre-qualification we touched upon, and then we pull credit and verify income and issue a pre-approval. Next screen. We also partner with GreenPath, which is a great financial wellness organization that can help you if you're really in the early stages and you want to know, talk about credit, you want to talk about, how to save for a down payment. GreenPath is a great tool, a great product to reach out to, and they can also assist you with budgets and kind of go over counseling with you. So I do recommend, to partner with GreenPath as well as the credit union. Next screen. Identifying properties. So usually when you do start pre-approval, you kind of want to have an idea, where are you looking to buy a home? Some members will come to me and say, you know what, we're looking anywhere within, 45 minutes to an hour from Cambridge. And they have a variety of city or towns that they're open to, which gives you a little bit more inventory. So location, you want to, let us know where you're looking to buy a home. The biggest impact of where you want to live is we want to make sure that we're calculating the right property taxes, and helping you qualify you with a payment that's, for that particular area that you're looking to buy a property in. Are you looking for a condominium? Are you looking for a single family home? Most of the time when I do a pre-approval, I'll do it based on a condo or a single family, because sometimes, either or will work for most borrowers. Sometimes you'll see a townhouse that you like. So we kind of incorporate the single family and the townhouse condo into one pre-approval. Multifamilies are a little bit of a different product. We do sometimes require a higher down payment. We do require higher property reserves, and what that is, we require you to have a little bit more money after the process, such as 6 months of reserves. And what reserves are is 1 month of your housing payment. So let's say your housing payment, which includes your principal and interest mortgage payment, your property taxes, homeowners insurance, private mortgage insurance, let's say that comes out to be $3,000 a month. On a multifamily, we want to see that you have 6 months of reserves, which would be equal to $18,000 after all said and done. So the multifamily is a little bit different when qualifying, and that might be a good idea if you're specifically looking to speak to someone about a multifamily. Reach out to one of the originators at the credit union, and we can go over, what's required and how we would qualify someone for who's buying a 2-family or a 3-family home. And then you want to have an idea of what you're looking for. Are you looking for something, that has a yard? Are you looking for something that has a garage? 2 bathrooms. So identify properties that you're interested in, because once you start working with your realtor, you want to have them show you properties that kind of meet what you're looking for. If if you're looking for a home that has 1.5 baths, you want your realtor to know that that's kind of one thing that you really do want to have. You want 3 bedrooms versus 2 bedrooms. So have your idea of what you're looking to buy kind of outlined, and your realtor will kind of narrow down and give you options based on what you're looking for. Next slide.
Quick interruption, Sharon. Sorry about
Sure.
that. But I do see there are some questions coming in. Thank you so much. Please continue to put them in. We will be answering questions at the end. And I will continue on. Thank you so much, Sharon.
Thank you. Next slide. Okay, so you kind of went through the process. You found a place. One thing I'll mention, I'll back up a little bit just regarding your realtor. Your realtor is somebody that's going to be a key person in your home buying process. And you do want to reach out and kind of interview and determine who you want to work with when you're ready to do your pre-approval. That kind of goes hand in hand, your pre-approval and your realtor. You do want a realtor that is familiar with with the area that you're looking to buy. So the team that we talk about is your lender, which you want to work with a lender who's going to offer you great rates, great service, and who's available to speak with you and kind of go through the process. You want to also find a realtor who is community-based That's a key piece. So you want someone, if you're looking to buy a home in, say, Waltham, you want someone that knows the Waltham market pretty well. They're going to know when houses are coming on the market. They're going to know, when an offer is due, what should I put in for that particular property? How much should I offer? Should I offer over asking, under asking, or should I offer the purchase price? So someone really knowledgeable with the area that you're looking to buy. You want someone experienced and someone that does this full time. And the third person that you want on your team is your attorney. The attorney is the person who's going to help you with the negotiation. So once you have an accepted offer and you're ready to go to your purchase and sale, your attorney is going to be the one who's going to draw up the purchase and sale and work with you to make sure that you're protected. That if for some reason something goes wrong in the transaction, something changes, that you're not going to lose money. Your attorney will put in there, if you want to make sure that the wash machine and dryer is a part of the purchase and sale, they'll outline the purchase and sale and make sure that everything that you want for the purchase is in that purchase and sale. And that's a legal binding document. So the attorney will be the one who will help you with that. And then in turn, that same attorney usually will help you with help work with the credit union doing the transaction itself. So they'll help with the title work, they'll perform the mortgage transaction. So they play a role, a key role as well. So your lender is important, your realtor is important, and your attorney is important. One other person that's not listed in here is a home inspector. I would say, there's many out there, home inspectors. You'd want to have a home inspector when you're ready to start looking at properties. That way they can go in and inspect the property and give you an idea of what may need to be done to the property, if there's any large repairs needed. So another team person may be your home inspector as well. Some people waive that, but that's another person on the team I would say would be a valuable person. Next screen. Preparing an offer in Massachusetts, it's a little bit different. We offer in all of New England and Florida right now. So we do all of New England. Each state is a little bit different. In Massachusetts, your realtor is the one who will put in your offer. So once you find a property that you want to put an offer in, your realtor will be the one that will handle that documentation. They'll prepare the offer, they'll submit it to the seller's agent, and then they'll decide, the seller's agent and the seller will decide, what offer they're going to accept. Usually at the time of offer, you're required to put down a good faith deposit. And what that usually is $1,000 at the time you want to submit your offer to say you're interested in purchasing this property, and usually you give $1,000 deposit. That's only kept if they accept your offer. So it's only there as a deposit. However, if they do not keep it, if they do not accept your offer, you get your money back. In the offer, you'll decide, closing dates, if you're going to have, when your mortgage contingency date is. And what that is, that's when you actually, so there's going to be timelines that are going to be outlined in the offer, when you'll go to purchase and sale. Offer is done, your offer is accepted, and then usually within 10 days you go to purchase and sale, and that's when your attorney will draw up that document that will outline all the required dates, when you're going to close, when you need to have a mortgage in place, when you need a lender to tell you that you've been approved. The lender's already gone through your credit, they've gone through all your assets, you've had a home appraisal done on the property. So that's when you get your full approval from the lender, which is called your commitment letter. Closing date is determined, and as I said, usually from time of offer to purchase and sale, it's about 7 to 10 days that you'll have this document drawn up. The purchase and sale is a legal binding document, and once again, I usually suggest the attorney usually handles that at that point. In New Hampshire and Rhode Island is a little bit different. Usually the realtor handles that, but we would work with you when you determine what city or town or what state you want to work in. We would work with you to help you determine who should be helping you with different stages of the process. Okay, next screen. Okay, so when you apply for a mortgage, that's okay, your offer's been accepted, you're ready to apply for a mortgage. Once you submit your mortgage application, I usually say you want to, you do your due diligence, you'll call around, get rates, and find out, who's going to give you the best rate, the best service, the best, the best product. At the time of your application, or when you submit an application, you'll get what's called a loan estimate. The loan estimate is a document that will be provided to you from the lender that will provide you all the costs associated with the loan. That piece is really important. It's going to tell you, what the lender is going to charge you, what the appraiser is going to charge you, what the attorney is going to charge you. Everything you need to know regarding cost will be in that loan estimate. So every time when you're reaching out to a lender and you want to get rates and you want to get an idea of what it's going to cost, they should provide you an estimate of closing costs and other costs associated. So that's the loan estimate. And that's usually given to you right up front when you submit your application and lock your rate. When you lock in an interest rate, rates are published daily, rates change all the time. When you lock in the rate here at the credit union, you're locked in for 60 days. So regardless if you close in 30 days or you close in 60 days, you're locked in for 60 days. So within that timeline, if rates go up, you're locked into that rate. However, if rates go down, you're locked into the rate that you agreed to at the time of application. So that's good for 60 days. Next screen. Mortgage process. So once you've accepted offer, all the fun starts at the mortgage process. It's a lot of documentation, and you might feel like you're providing multiple documentation, and you are. That's probably the biggest process of the whole. I'd say the hardest process is getting all the documentation and uploading it all into a file. You'll be asked for a lot of documentation. Usually, you'll have to provide, tax returns, pay stubs, W-2s, bank statements for 2 months, and then continue updating bank statements as we go along. Down payment source is one area that you're going to want to have an idea of where this money is coming from. So when you fill out your application, the lender's going to know, where did you get that $1,000? What bank did that come from? Where are you getting the 5% down? We'll order an appraisal at that time. Once we have the appraisal documentation, the loan is then approved by the underwriter, and a commitment letter. That's your mortgage contingency date. Your commitment letter is issued to you, and that means that the lender has agreed to lend you X amount of dollars based on this particular property. During that time, your commitment letter is issued, then your loan goes to closing, and that's when your loan is cleared to close. One thing to keep in mind, and there's a lot of information I'm giving you, but one thing to keep in mind, once you're in the process of applying for a mortgage and you try not to apply for new credit, try not to move money around. Everything you do is going to have to be taken. You're going to have to provide documentation. So let's say someone gives you $10,000, you put into your account, the lender's going to ask, where did that $10,000 come from? And you're going to have documentation to show that, oh, that was a gift that was given, let's say my sister gave me a gift to help buy the house. You'll have to it'll be documented. We do accept gifts. If you do receive a gift for the purchase, it has to be a family member, a partner. So it has to be somebody in that. It cannot be a friend that's giving you a gift to purchase the home. So gifts you can take a gift from somebody, but it has to be a family member or a partner. Next screen. So the closing. At the very end, what you're going to receive, prior to closing, once your clear to close happens, there'll be several days in between that the attorney and our closing team will work on providing you a closing date, a time, all the details, but you'll also get what's called a closing disclosure. That closing disclosure is going to outline all the final numbers. What's nice about the closing disclosure is you can compare it to that original loan estimate you got at the very beginning of the transaction. The loan estimate and the closing disclosure should be pretty close, so there shouldn't be any surprises. What this prevents having a closing disclosure is that when you get to closing, when they tell you need $6,000 to bring to closing, you're going to need $6,000. It's not going to turn into $16,000. Whatever's outlined in your loan estimate should be carried over to your loan closing disclosure. They should be pretty similar, so there's no surprises. So you'll get your closing disclosure 4 days prior to closing. And that will give you all the final numbers and let you know what you'll need to be prepared to bring to closing as your share of the funds. You'll also set up a time to walk through the property. Usually that's done within 24 hours of closing, and that's your time. You go into the property before closing and make sure that everything's in place the way you expected it to be. If you had outlined in your purchase and sale that you wanted them to leave the wash machine and dryer, when you do your walkthrough, the wash machine and dryer should still be there. So that gives you one time to go through the property and make sure that everything is there the way you expected it to be there and nothing is missing. You know, all the fixtures are in place, the property is how you want it to be. Next screen. So the roadmap is, we kind of touched upon a lot of information. Express pre-approval. I usually say pre-approval or pre-qualification. I like to start with the pre-qualification. That's the initial start of kind of getting yourself prepared for the pre-approval. Pre-qualification, I always say, if you're looking, 6 months out, a year out, doing a pre-qualification is just a conversation. We're not going to pull your credit, but it's going to give you an idea of what to be prepared for. And I always say I welcome doing a pre-qualification multiple times. It's not something we have to do once and then immediately go to the pre-approval and start pulling credit. Until you feel comfortable, until you're ready to start working with a realtor, I would say hold off on doing the pre-approval until that point. Most of the time, the biggest question is you want to make sure that your credit report is there's nothing on your credit report that you're not aware of. Nowadays, with our credit cards and our bank statements and our online banking, most members have a good idea of what their credit score is. So you have an idea of what's going on. So I usually say hold off on your actual pre-approval until you're within, you're ready to start working with a realtor. I would just do the pre-qualification and then move to pre-approval when you're ready for that point. Once you've been approved, you go shopping for a home, you're working with your realtor, you put offers in. Once your offer is accepted and you go to purchase and sale, that's your legal time that you're agreeing to buy this home, and anything that you want in that purchase and sale will be outlined by the attorney to protect you. So you have your offer's been accepted, you go to purchase and sale, and then the next step is you want to make sure you find a lender who you want to work with. You want to verify rates, you want to check their turnaround time. You want to make sure that someone's available for questions. So you would at that point submit a loan application. Once you submit your loan application, you're locked into an interest rate for 60 days. During that 60 days, if rates go up, you're protected, and we will work within the timelines of what's outlined in your purchase and sale. So if you need a mortgage commitment letter, 2 weeks out, we'll work hard to get you that mortgage commitment letter 2 weeks out. A lot of things I say great about the credit union, but we do meet all the timelines, and we really do strive to keep the process going as quickly as possible and meet the guidelines before they're even due to be met. So we do stay on task for that 99.9% of the time. We're excellent at meeting all the timelines. You'll do your loan estimate, your loan application, you'll get your loan estimate. It'll give you an idea of what to expect for closing as far as what it's going to cost you, what the different fees are going to be. And then you're going to submit all your documentation for processing. As I said, that's probably the piece of it that's a little bit, I shouldn't say challenging, but you're asked for a lot of documentation, multiple, your bank statements, any movement of money, any large deposits you need to source. So there's a lot of moving pieces in the application process, but gathering all the documents, submitting them. What's nice is there's a loan portal that you'll do everything electronically. And once you submit it, they'll be reviewed and it'll be marked that we've received your documents to move on to the next step. Anytime anything's updated, they may need a new pay stub. You'll get an alert that we need more documentation, and that will be done through a loan portal. But you always have your loan officer, your mortgage loan originator with you the whole time, who will help you throughout the process. So if anything comes up during that time, we will, I usually say once we're ready to move forward, let's set up some calls throughout the process. It's nice to touch base once or twice a week. That way, if there's anything that comes up and you're not waiting to get an answer, we welcome texts, we welcome emails, and we welcome phone calls. So anytime you need to speak to us, just send us a message and we'll make time to answer any questions you have. Next screen. Next screen, Terrence.
Okay, and honestly, that is bringing us towards the end of our presentation. I'm going to kick it over to you, Sharon, one more time, but I do want to talk about HUECU services and products. And please, if you need anything at all, please visit us at huecu.org/home loans. I'll be putting that link in the chat. And there have been some great questions. We're about 30 minutes through, and we will be answering questions at the end. Please keep those questions coming. Thank you again. Sharon, right back to you.
Thank you. So, as Terrence said, the credit union is a full financial institution. We have all products. We have checking accounts. We have savings accounts. We have great auto loans, credit cards. So we're a full financial institution. And credit unions are known for great rates and great service. So if you're not a member of the credit union, you probably want to look into it. It's something I would say it's a great benefit that that's offered. And we do offer a great service throughout the whole, through all of our products. On our website, there is a section that says, you can fill out complete a pre-approval. It will direct you into the portal. You'll provide an application completed. It will get submitted to one of our MLOs, mortgage loan originators. We have 5 originators that work at the credit union. We all have specific areas that we work out of. However, we all can work out of any area. So there's 5 of us. Feel free to reach out to any of us with questions. And all of our MLOs have been at the credit union for quite some time and are very knowledgeable about the mortgage process and will help you from start to finish.
Awesome. Thank you very much, Sharon. I'm going to close out really quick and then we'll move right into questions. Next up, please feel free to take our survey, which is huecu.org/survey. I'll be putting a link in the chat. And from here on, we will be taking questions. First question that we got in the chat is, can you give an example of what you mean by something unique about a condo, RE portfolio bullet, or portfolio lending maybe?
Absolutely. So one item is, let's say you find a condo. The condo has 5 units in the condo, and most lenders will require 50% or more owner occupied. Let's say out of the 5 units, 2 are rental, and I was like 3 are rental and 2 are owner occupied. The credit union has the ability to make the exception and say, okay, we can still do that. Because it doesn't meet, we underwrite all of our loans with Fannie Mae guidelines, but that doesn't mean if something is a little bit unique, we can't do it. We can still do it. The credit union will look at every property, everything individually and say, okay, just because it does not meet those 5 standard guidelines that Fannie Mae tells us that, has to be owner occupied, has to have a percentage, of who owns what. The credit union will look at each deal individual and make a decision on that particular product. So it's something that we would consider doing, even if it's not a straightforward Fannie Mae property, that it meets all guidelines that they offer. I hope that explains that.
Awesome.
Does that, hopefully that helps.
Yeah, I think it does. Our next question, how high are interest rates anticipated to be over the next 10 years or so for the purpose of considering an adjustable rate mortgage?
Okay, right now, it's hard to say. I always suggest look at all products when you're looking for rates. I always usually talk to the members, even if someone is not interested in adjustable rate mortgage, I'll go over the pros and the cons. Right now at this moment today, there's not a huge difference between an adjustable rate and a fixed rate mortgage. So at this, I would say my recommendation would be probably look at a fixed rate loan. For example, our 30-year fixed rate is at 7.625. If an adjustable rate was 0.25% lower, calculate what the payment is, see how much you're going to save during that period of time. So we offer multiple adjustable rates. We offer a 5-1, a 7-1, a 10-1, and a 15-1. with that, I would say chances are you lock yourself, you get yourself into a 7-1 arm. Chances are you're going to refinance. Are you willing to risk that? Okay, within the next 7 years, I'm going to refinance, but I'm going to take that lower rate during that time. But I would say, because rates change so much and so quickly, sometimes the adjustable rates are 1% lower, sometimes they're 1/8 lower. I would run through all the numbers with you and say, this is what it is today. I don't know if it makes most sense, and I'll probably give you my recommendation, and then, kind of weigh the pros and the cons with going with the adjustable rate or the fixed rate. Up until probably, a couple of weeks ago, a lot of our members were doing the adjustable rates because there was a good amount of difference in the rate. Right now, they're pretty close.
Okay, awesome. Next question. What fees are associated with refinancing down the line?
It's a great question. Definitely less than what you're going to do with the purchase. I would say on a refinance, we're still going to have to, have an attorney take care of the transaction. We'll still have to do a new appraisal. There'll be title insurance for the lender. Closing costs on a refinance would probably be close to anywhere, I would say, anywhere from $2,500 to $3,500 approximately. Whereas a purchase, it might be $4,500 to $5,000, so you'll see a definite savings. We do give discounts if you come back to us for a refinance, so the credit union does offer discounts. But I would say, probably about $3,000 might be a safe number to say approximate closing cost, to pay for the appraisal, the attorney, anything, the title work, anything that's involved with the transaction.
Awesome, thank you. Next question. How much is a realistic amount for a down payment in this economy? Does it depend on area?
It can. Years ago, we used to say 20% down. I would say more than half of our members are not putting 20% down. We have a great 3% down program. So it just depends. Sometimes they say, a higher down payment, your offer may be more likely to get accepted. But I've done multiple deals with 3% down. Offer's been accepted. So it just depends on how comfortable you are and, what you have to put down. But I would say talk to your realtor. They'll know the market. They'll know that particular area that you're looking to buy a home. And, maybe kind of give you a strategy to get yourself in a good position. So when you do put your offer in, even if it is 5% down versus a higher amount, there might be other things they can help you with to get your offer accepted. Maybe a quicker turnaround time or a quicker closing date, more flexibility. But I would say most members are not putting 20% down because of the costs that the houses are. We're seeing a lot of 5 and 10% down payments versus, several years ago, you'd see more 20% down payments. But we have a nice 3% down payment program, that I think is a great program, and a lot of our members have taken advantage of it.
Thank you. We have a bit of a longer question, but I'm going to edit it down a little bit, so I'm sorry if this is disrespectful. It's an inspection question. What is the difference between a full and pre-inspection, and how risky is it to get a pre-inspection instead of a full inspection?
In this market, probably in the last several years, pre-inspections are very, very common. And what that is once you're going to your open house, if you have you're interested in a particular property, you may bring somebody along with you to do the inspection at that time before you put your offer in. So what will happen is the inspector will go with you. They'll give you an idea of what the details of the home. And then when you do put your offer in, you can do it without an inspection. You've already done your inspection. You've done a pre-inspection. The downside to that, it's going to cost you money to have an inspector go to a house that you don't even know if you're going to have your accepted offer or if you're going to proceed to purchase the house. But a lot of people do bring someone along with them to give, to do that while they're there looking at the property, to give them, so they can avoid putting an inspection contingency clause on their offer. So it kind of helps. Some sellers will do the inspection, will have that up front. I haven't seen a lot of that, but pre-inspection it shouldn't be the biggest. I don't think there's any higher risk on it. You definitely want to talk to an inspector to see, to get more facts on that. But I would say the biggest impact to you would be you're paying for someone to go into the house with you to do an inspection, and you may not in turn get that property, or you may not even put an offer in the property. But it would save you if something came up. But you could then turn around, put your offer in, and waive your inspection because you've already done that. You know what you're getting into, and that would be, a benefit to you to get, maybe your offer accepted more so than somebody who has that outstanding that they're going to request a inspection after they put their offer in.
Great advice. And I do want to give you a quick time check. We have about 20 minutes left. We have a few more questions. They've all been amazing thus far. I think we will be able to get through all of them. Next question. If you pull out of an offer after it has been accepted, what exactly do you lose?
Okay. So that it depends on when you pull out of the offer. When you put an offer in on a property, that first few days before you go to purchase and sale, if something does come up, you can reasonable. I always say for something like that, I would highly suggest talking to an attorney. Once you go to purchase and sale and you pull out of an offer, you could risk losing your down payment, which would include your $1,000 at offer. And then usually when you go to purchase and sale, you're required to put 5% down. So you do risk losing that money if you decide you're not going to go forward with the home. There are reasons to get out of the deal, but they're specific. One reason is if you apply for a mortgage, your offer's accepted, you submit an application, you're already signed your purchase and sale, and then for some reason down the road, which we hope this wouldn't happen, your loan was denied. There are reasons you can walk away from a mortgage transaction if you can't get the loan, but there have been people who have lost money if they decide that they just want to walk away because they no longer want the property without a reason that's outlined in the purchase and sale. I would highly talk to your attorney on that regarding, what would happen if this happened, or if, you decide to, move out of state, now you're not buying the home, but there's going to be, you could risk losing your down payment and your 5% that you put down at time of purchase and sale. So there is risk on your end.
Good advice. This is a pre-approval question. If you renew your pre-approval before it expires, are you able to keep the same interest rate, or will the new rate at the time of renewal apply to the new pre-approval?
That's a great question. During pre-approval, you're not locked into an interest rate. When we pre-approve somebody, we're only pre-approving them based on market rates at that time. When you update your pre-approval, we'll do the same thing. We'll base it on market rates. You don't actually lock into an interest rate until you have an accepted offer and you formally submit an application to the lender. So let's say I did a pre-approval for you. Today's rate is 7.625. And fast forward, 3 weeks from now, you have your accepted offer, you come back to me. We're going to go over that day's rate. So if rates, whatever the rate is at the time you have your accepted offer and you're moving forward and submitting your formal application, that's when you'll lock into a rate. The rate when we're doing pre-approval is just to determine your monthly payment and qualifying rate. You're not locked into a rate at that time. You're not locked in until you actually have an accepted offer and submitted an application with the credit union.
Very nice. We have almost 15 minutes left and 6 questions. Next question is, what is a good timeline to wait between large deposits / opening credit lines after and getting pre-approved?
Any large deposits any large deposits within 2 months is going to need to be sourced. So the question was, I'm sorry, can you repeat that, Terrence?
Yes.
I'm sorry. Yeah.
What's a good timeline to wait between large deposits / opening credit lines and getting pre-approved?
I would say hold off on opening any new credit lines unless you need to. I mean, obviously, if something came up and you had to buy a car, I would say let your originator know, and they can kind of factor in, I might need a car before I buy the home. Let's factor in a monthly car payment of $400, just to be sure that when you're in the process, and if you do need that car, it's not going to impact anything. As far as large deposits, you can deposit money throughout the whole process. It's just you're gonna have to show a trail of where the money came from. So it's not so much that it's frowned upon depositing large deposits. It's just that you have to show a paper trail. If the money's been transferred into an account within, 2 months before you start the process, that's considered your own money without the paper trail. So it just depends on, whether you, I would say, it's just more paperwork for you if you do it throughout the process. But if you deposit money 2 months later, you apply for a mortgage, that money is considered your money, and then we're not going to ask for details on where that money came from.
Awesome. Next question. Is it possible to buy a house with a credit card? Or with credit card debt, I'm sorry.
Absolutely, absolutely. When we qualify somebody, we're going to use all debt that's on your credit report to qualify you. What we would do is we would use your minimum monthly payment. So let's say you had 3 credit cards and you had $100 each one of them monthly payment due. We're going to use a payment of $300 in qualifying you. So sometimes it might be a good idea, if you're close and you maybe want a loan amount a little higher, try to pay down your debt first. But I would say just reach out to one of us and we can kind of give you an idea of, based on what debt you have. We use car loans, student loans, credit cards, any type of monthly debt that's on your credit report, we're going to use in qualifying you. So it doesn't necessarily mean you have to pay all your credit cards off in full before you apply. I mean, it's nice to have no debt going into it, but it's not something that a lot of people have. A lot of people have reoccurring debt that they pay monthly, and and we would just qualify you using the minimum monthly payment.
Thank you so much. Next question. I'm looking to buy a house around March to May 2024. When should I apply for pre-approval? I currently have a pre-qualification.
So I would say if you're looking in March, I would say you're probably, unless you as long as you have a good idea of what your credit score is, you don't think there's anything out there that you need to correct or anything, you've gotten a copy of your credit report, I would say looking to start shopping in March, I would say you probably want to start in, sometime maybe in the middle of February. That way, you have your pre-approval, and within that timeline, you can start looking, and you'll have 3 months out. I would say that would be reasonable. But before you do your pre-approval, if you want to do a pre-qualification again, kind of go over the numbers, just because rates have changed, just to make sure that, you're still, looking for the same, property price, same down payment. We can kind of go through things again. But I would say usually a couple of weeks before you're actively going to start working with a realtor, I would get pre-approved.
Nice. Next one. Do we need to have an account at the credit union to use the mortgage services?
So to use the mortgage services, we require you to become a member once you apply for an actual mortgage at the credit union. We'd love for you to become a member regardless, whether it's pre-approval, pre-qualification, and then mortgage. But for pre-approval and pre-qualification, we're here as a benefit for everybody. So we can certainly, as long as you're eligible for membership, we can do pre-approval, pre-qualification, and go through the discussion, of what the mortgage process is. Once you decide you want to work with the credit union, at that time, you submit an application, you will need to become a member. But for this point, for our seminars and our information sessions, everyone is welcome, to attend, and we can provide information for anyone who's eligible for membership without necessarily being a member at that moment.
Okay. Next up, and I do want to give you a quick time check. We have about almost 10 minutes left, and we have 6 questions, and I think we want to get through all of them. You've been great so far, Sharon. Thank you.
Thank you. Thank you so much.
Next question. Are there better rates / better loan products available if your down payment is 60 to 85% of the price?
Probably at some other lenders. Here at the credit union, anybody who puts more than 20% down would not have to pay private mortgage insurance. But at this moment in time, the rate would not change. So not necessarily at the credit union. Some lenders would say if you put more money down, the rate may be better. So that could be something that they, you'd want to reach out. But here at the credit union, as long as whether you put, 3%, 5%, 25% down, your rate's your rate. The only difference that it would be if you put less than 20% down, you would do private mortgage insurance, which is additional cost to you because you're not putting that full 20% down.
Awesome. Thank you so much. Next question. Is the mortgage application process affected or changed when the purchasers are an unmarried couple? If so, how?
No, it's the exact same process. You fill out two applications. You'll identify whether you're married or partner or joint application. It's the same process. Nothing is different. The only difference you would do is you would speak to your attorney and how you want to hold title. So how the property title will be held. But no, it's the same process whether you're married, partner, or friends, family members. There's no difference.
Nice. That was a simple one. Next one. I own my own condo, but I'm thinking about moving to a single family. Could you talk a bit about the current landscape surrounding making an offer contingent on selling your previous house? Is that even realistic in this market?
That's a hard question to say. It all depends, because sometimes that when you are putting your offer in, the person that you're looking to buy the house for may have a longer timeline as well, so they're okay waiting. So it all depends on that particular property. If the person is anxious to close on their home to get their proceeds to buy their new home. But I would talk to your realtor. Sometimes we can qualify you with the new property, your existing property, if that would work. But sometimes it all depends on that particular situation. So if you're looking at a property and that person's selling their house, but they really don't need to move for 6 to 8 weeks, that will give you some time. So they might be open to accept that offer with the contingency. But they might put a date on it that if it's not sold by this date, then we're going to put it back on the market. But there's definitely workarounds, and definitely it can be a little bit more challenging, absolutely. But it does happen, and I've seen it, recently. So it's not something that's out of the question. So I would talk to your realtor and, the area that you're looking in, the types of property you're looking at, and see what they give you back as feedback.
Okay, about 8 minutes left and 5 questions left. I think we can get through it. Next one is, does a 3% down payment end up costing you more in the long run due to higher monthly payments, mortgage insurance, etc.?
Yes, it absolutely does. It does cost you more money because you're borrowing more money versus someone who's putting 15% down. You're paying for a monthly mortgage insurance premium. However, the way things have been going, with the rates and the values of the homes keep increasing. So every time you make your monthly mortgage payment, whether whether it's a 3%, you put 3% down or 20% down, you're paying money back to yourself. You're paying down your principal. So there's a lot of different factors that go into that. But I would say, yes, you are going to pay more money because you're borrowing more money versus someone who put 5% down, 3%. Our 3% down program, we have a home ready program that we offer for 3% borrowers. We do give a discount on the actual interest rate if you qualify, and we also give a discount on the private mortgage insurance for a home ready borrower. And so there's some perks to it as well. I would say meet with one of us, run the numbers. We can go over what you're eligible for, what the payment looks like, and then you'll see the whole breakdown on paper. This is what your payment's going to look like with 3% down versus 5% down. You do qualify for our home ready program. And this is going to give you an additional 1/8 off the rate. It's going to give you an additional closing cost credit plus cheaper PMI. So that there's a lot of things that go into it that can help offset the cost. One nice thing at the credit union is that once you do pay 20% down, so let's say you do buy a property with 3% down and you've paid down your principal and now you have built up 20% of equity, you can request the PMI to go away, which is a nice feature because it's not there for the next 30 years. It's only there until you've paid down your 20%. So PMI does go away on our loans, which is a nice feature.
Nice. We have just about almost a little over 5 minutes left. So rapid fire for these, Sharon, okay?
Okay.
I bought a house in 2006 in another state and I've sold it. Can I be considered a first-time home buyer in MA?
Yes, anyone who has not owned a home in the past 3 years is considered a first-time home buyer.
Beautiful.
With that being said, just if there's 2 people, joint borrowers, one has owned a home in the last 3 years, one has not owned a home over the last 3 years or never owned a home, we would still consider you a first-time home buyer. So only one of the applicants need to be a first-time home buyer or have not owned a home in 3 years.
Awesome. Next one. Who can I talk to now if I'm seeking advice on when to purchase a house given my salary?
Any one of our originators, you can make an appointment with anyone and we can certainly sit down with you, go over your salary, go over, and I always say go over, what you feel comfortable with. We qualify you, we can tell you what you qualify for, but I always put it back on our members and say, well, what do you feel comfortable? What type of payment are you looking for to kind of give you an idea of what what's comfortable for you versus me telling you can afford so much. But any one of the originators, we have calendar appointments out there, we do Zoom calls. We can do in-branch appointments, we can do phone calls, and we can give you an idea based on salary and debt, what at this time you qualify for.
Awesome. And I have been putting links in the chat. If you are interested in scheduling a meeting with a mortgage loan officer, visit us at huecu.org/home-loans. 2 questions left. If someone is debt-free and has good credit, is there a rule of thumb estimate as to what price of home one might be able to afford based on their yearly income? For example, $80K a year roughly equals a $300,000 home price.
So how we qualify someone at the credit union is we would take your salary, we would determine what your monthly income is, and we try to stay within 36 to 42% of your overall gross monthly income. And that's where I say we can qualify you up to 43% of your gross monthly income, but you may not feel comfortable with that. But our rule of thumb is we'd want to say you probably want, with no other debt, you'd probably want to be within that 38%, 40% of your gross monthly income as a mortgage payment.
Nice. And last question, 3 minutes left. Great timing. Who/what properties qualifies for the 3% down payment option?
So single families and condos and townhouses.
Beautiful. And I believe that's all the questions. Thank you so much, Sharon. Thank you so much, everybody, for joining us. This presentation, again, will be recorded and uploaded to our YouTube page, and it will be disseminated after the presentation in our follow-up thank you email. If there are any more questions at all, please feel free to reach out to us at my HUECU on all the social channels, or feel free to stop by our offices at LMA or our Harvard Square branch and talk to a mortgage loan officer. Thank you very much again for everyone joining us. And thank you, Danielle from HUCTW, for joining us. I hope everyone has a great rest of your day. Please enjoy your day. Bye-bye.
Thank you so much. Have a great day.